Ever wondered how startups like Facebook and Uber got their big break? It's the secret of venture capital. The one key phase that can make or break a startup is... Welcome everyone. Today we're diving deep in the world of venture capital. What it is, how it works, and why it's crucial for startups. By the end of this video, you will know everything you need to know about venture capital and why it's a driving force to the world's most successful startup companies. But first, let's start with a burning question. What exactly is venture capital? Imagine investing into the next big thing before everyone else knows it even exists. Exciting, right? Venture capital is all about that early stage investments in startups that have high growth potential. Now there are a few key phases in venture capital that every aspiring investor needs to know. Let's break them down. Phase 1, the seed stage. At the seed stage, startups are just getting off the ground. They rely on initial funding from friends, family, and investors. We call this the 3 Fs: friends, family, and fools. This is where the journey begins. Phase 2, the early stage. Next, we have the early stages, Series A and B rounds. This is where the venture capital firms come in, providing the critical funding startups need to grow. These rounds can bring in millions of dollars, and they are pivotal to scale the startup's operations. Finally, we have reached the growth stage, Series C and beyond. Here, startups are looking to expand even further, often internationally. These investments are larger, but so are the rewards. Let me introduce you to some of the top venture capital firms: Sequoia Capital, Andreessen Horowitz, and Excel Partners. These firms have backed companies like Google, Facebook, and Spotify. Now let's talk about the relationship between VCs and startups. Unlike private equity, which takes more of a hands-on approach, venture capital is more about guidance and mentorship. VCs usually take a board seat and provide strategic advice, while the startup focuses on growth. So the elephant in the room is, how do you become a venture capitalist? There are 2 main paths. Become an expert investor. If you gained experience in a particular industry, maybe through an MBA or by working in finance. Your expertise will be your biggest asset. Another way is being a successful entrepreneur yourself. So you've started your own startup, went through all these stages, and you did a successful exit. Now you have millions of dollars at your hand, and some of the money you reinvest into the future generations of entrepreneurs. If you're not an expert yourself, find an investor or entrepreneur to partner with. You don't need millions to start. Some funds, like Harlem Capital, began with just $25,000. It's all about making your first move. And now we come to the most important step, how to cash in. A crucial aspect of venture capital is the exit strategy. Common exits include IPOs, acquisitions by larger firms, or selling shares to private equity. Always have a 5-year exit plan in your mind. If you found this video helpful so far, and you want to learn more about venture capital and startups, make sure to hit the subscribe button. I have a lot more exciting content coming up that you don't want to miss. Join our community and stay ahead of the curve. Thanks for watching, and see you the next time.